Unlock your potential with a comprehensive suite of investing tools and expert education with GammaEdge. Start your free 14-day trial today.
Good morning, traders. This is Michael coming to you from GammaEdge on Thursday, November 16th, today with our morning strategy briefing. And we're going to jump right into it. The SPX PM Settled that I'm going to show here in just a minute. I want to make sure everybody's referenced where all of our pre-market commentary is. We are in the hashtag morning call thread. Make sure you're joining that thread and understanding where everything's posted. Here's the morning call PDF, all listed with our commentary this morning. Make sure you're looking at and referencing the GammaEdge summary for the tick market models. We've been extensively covering those in open mic with our back testing and understanding each day possible trades with SSO and SDS. Those are individual trades that we open at the market open and then close obviously at the market close, and the probability of average returns through the day. Again, make sure you're looking at the tick, understanding it extensively, our tag combos, and we'll review those here in just a few minutes. I'll go ahead and jump in the SPX PM Settled 0DT for today. PM Settled 0DT, we are put dominated above and below spot price, but we want to discuss the pains here today. Left-hand pain, right-hand pain is what I'm going to discuss. Left-hand pain below spot price, we're in the money call dominated, as we were call dominated totally in the complex yesterday, but we do have some in the money puts above us. These out of the money call speculators have eroded into today, exposing those puts above us, but we still have in the money calls below us that will be supportive as we traverse the day most likely. Make sure you're referencing the total OI, only 283,000 today. That's a very low OI and expiry for today, so we could just be stagnant, bouncing back and forth between levels. That will be Gamma and Delta dominated. That's why we go over those in the morning, and then Charm obviously heading into the afternoon. We discussed that obviously in the voice chat throughout the day when we recognize change in states or levels that will become important throughout the day. So for me, looking into today, transition is going to be extremely important. I'll reference that here in just a minute in the trading view. But 44.95 to the downside, obviously we know 45 will be extremely important. 44.80 to the downside. These in the money calls, as long as they remain and we do not see mechanical closing with the vol D command, then we will most likely be supportive down to that level. If we get below 44.80, potential for slightly more weakness down to 44.60 and 44.65. We'll show those on the complete complex, but transition moves down there and supportive action as we move into those levels. Above, obviously with these in the money puts above us, unless we get mechanical closing and targeting and out of the money call speculators coming in, probably be most likely harder to move up towards that 44.25, 44.30. We referenced the top of the transition range is extremely important to get above and stay above, and then be able to push up towards 44.30, 35, and then we see it trail off pretty significantly. We see the net GEX really jump off down into the single digits pretty quickly, and then obviously the net OI. So understanding that where we're at in the transition, coupled with total OI that is low and expiry for today, as well as the tick market model looks to be in transition, most likely will be range bound. 44.80 to the downside, 45.15, 45.20 to the upside, unless we see a significant market and sentiment change. I'm going to go and jump into the Indel command here. We can see that in the money calls dominated here 4,500, and then puts obviously in the money puts here at 45.10, and that gives us what we've coined here at GammaEdge as the pair of twos, which makes it difficult to make any progress in either direction. We're really just kind of bound by the exposure on both ends. I'm going to go ahead and reference yesterday. This is the 1 DTE transition here. Obviously, we discussed in the morning possibility of price moving down towards that 44.80, 44.90 level, and then moving and be supportive from there, and moving back up 44.10, 45.15 would most likely be the cap. We can review that price action here in just a minute on Trading View. We'll go ahead and head into the tick market model. Obviously, we're in a consolidation mode here. We do have railroad track up. We do still have trigger up days via the close above previous day close. But again, we're in anticipation of consolidation. The tick triggers for today have a little bit less average returns moving forward. We're finally starting to notice the red line in our total market model. Both these slopes are positive, but the red is starting to traverse back up through the ribbon. So this could lead toward what we call the ribbon flip, which would be a total market model long. and bullish look and structure where you would want to be long exposure for all accounts in the market, but we'll see how this continues to play out. CT needs to continue to live above the colored ribbon, so we want to make sure we see this red continue to move above cyan. Again, we are in the mindset, at least I am today, that consolidation could still continue into Friday, tick sideways or even pull back to this colored ribbon, and then we see some supportive type action move back to the upside. Obviously, if we do see a total loss of the colored ribbon, then we would change my stance for the market. Again, it was nice to see the breadth, new highs outpacing new lows for 2 days. We want to see that continue. Filtered cumulative tick just flat yesterday. Institutions not really involved, as well as cumulative tick here. So we want to see this again pick up. Obviously low OI today, as I've mentioned multiple times, and expiry. So I'm not anticipating this filtered tick really to change much today unless we see institutions really start to step in. You see what happened with the CT. We moved right up to the cyan line and then started to consolidate. Obviously, consolidation here could break either way, but this is a constructive consolidation within a railroad track up pattern. We'll go ahead and move on to the trading view. Again, I wanted to reference SPX. I've noted 0DT, GEX, and DEX here. That actually has a correspondence and confluence with COTMP as we open today, 44.95. That'll be extremely important. Plus GEX 4,500. We'll go ahead and click on this and expand it. Obviously, I've noted 45.15 up here, so I've kind of labeled out some levels via the web app in the morning call. Again, this is all in the web app. It's much easier to view, so I encourage everybody to make sure you're using the web app. Again, kind of some TA levels for the 5-minute view from yesterday. Again, 4,500 overhead, or 45.15 will be extremely important demand level or supply level overhead. As of now, very constructive consolidation type flag versus 4,500 at the moment. So we'll make sure we watch these levels. We had that gap up, sideways consolidation, another gap up. Now we're just pulling back to the top of this previous consolidation. So for today, obviously we'll be watching 44.95 on the downside, then 44.80 upside, 45.15 up to 45.20, which coincides with the high of the day yesterday. So that will be the game plan for today. We want to see obviously the market continue to consolidate. Obviously, we want to see the market continue to consolidate for the rest of the day, and then we'll see how tick plans out for the rest of the day. So with that, let's have a great day. We'll be in the Discord in just a few minutes. Thank you.